Assalamu alaikum and a very warm welcome to the Stock Sense Morning Brief, your daily dose of insights into the Pakistan Stock Exchange. I'm Malik and it's Monday, November 17th, 2025. We've got a lot to unpack from Friday's trading session, which saw the market make a notable rebound, and we'll look ahead at what might shape today's trading. Let's dive straight into the market summary. On Friday, the KSE 100 index closed strongly, gaining about 1,280 points to finish at 161,900. This represented a positive change of 0.8%, a welcome shift after some volatility earlier in the week. To put this in perspective, the previous day had the index closing around 160,660 points, so Friday's performance marked a significant uplift. Total traded volume on the main board was impressive, reaching over 673 million shares, with a traded value of nearly 34.6 billion rupees. This indicates robust participation, with advancers significantly outnumbering decliners as 276 stocks rose while 155 fell. Moving on to our sector highlights, looking at which sectors had the most impact on the market's movement, we saw some interesting dynamics. The oil and gas exploration company sector made a strong positive contribution, pushing the market upwards. Similarly, commercial banks also played a significant role in lifting the index. On the other hand, the automobile assembler sector experienced a notable negative impact, acting as a drag on the overall market performance. Now let's turn our attention to the technical picture of the KSE 100. According to our daily technical analysis from TradingView, the overall sentiment from moving averages is leaning towards selling pressure in the short to medium term. Many of the shorter duration exponential and simple moving averages, like the 10 and 20-day, are indicating a sell action. However, it's worth noting that the longer-term averages, specifically the 50, 100 and 200-day exponential and simple moving averages, are still signaling buy, suggesting underlying long-term strength. For key pivot points, the classic pivot point is around 162,650. Investors should watch the immediate resistance level at approximately 169,000 and support around 155,000. On the corporate front, there's one board meeting scheduled for today, November 17th. Trust Securities and Brokerage Limited will be holding a board meeting to consider matters other than financial results. Meanwhile, for investors looking at distributions, today is the last day of entitlement for Sui Southern Gas Company Limited, which has announced a 5% final distribution. So if you're looking to be eligible for that, today's your last chance. In macro developments and market news, we've seen several significant stories. A major positive is the sharp fall in Pakistan's central government debt by over 1.2 trillion rupees in the first quarter of fiscal year 2026. This is a strong macroeconomic indicator signaling improved fiscal health and reduced borrowing requirements, which can lead to lower interest rates and boost investor confidence. Another positive comes from the Commerce Ministry, which has finalized a 5-year textile and apparel policy, a crucial development for Pakistan's largest export sector. We also saw the CDWP clear 7 development projects worth about 34.6 billion rupees, signifying increased government spending in infrastructure, education and IT, which can create opportunities for various listed companies. The mood at the PSX has lifted after 3 weeks of losses, driven by political clarity and anticipation of IMF disbursements, which is a welcome change for market sentiment. On the technological front, a US expert has submitted a 5G auction report to the government, paving the way for next-generation mobile services and signaling significant investment opportunities in the telecom sector. And in the automotive industry, Master Changan Motors unveiled 3 new brands and 11 models at PAPS 2025, including Pakistan's first CKD range-extended electric vehicle SUV, indicating innovation and diversification. However, there are also some points to keep in mind. The State Bank of Pakistan has limited cash dollar transactions, aiming to formalize the foreign exchange market, which could impact banking sector operations. Globally, oil prices gained more than 2% due to a Russian port suspending oil exports after a Ukrainian attack. Higher global oil prices can be a negative for Pakistan as a net oil importer, potentially worsening the current account deficit and fueling inflation, though it could benefit local oil exploration companies. Lastly, the Prime Minister has called for an end to tax evasion from key sectors like tobacco and tiles, which could impact the profitability and transparency of companies in these areas. Now let's look at the institutional flows for Friday. Foreign institutional investors, or FIP, showed net selling of about $2.8 million. In contrast, local institutional investors, or LIP, were net buyers, with a net inflow of roughly $2.8 million, essentially offsetting the foreign selling. Diving deeper into the local flows, banks and DFIs were significant net buyers, with a substantial net buying of around $45.8 million. On the other hand, mutual funds were notable net sellers, offloading about $42.4 million. Individuals also showed net selling of around $1.8 million, while foreign corporates were net sellers of about $2.9 million. So, while local institutions as a whole were net buyers, this was largely driven by banks, with mutual funds and individuals showing selling pressure. My take for today is that while Friday's strong rally was certainly encouraging, fueled by positive news flow and a general uplift in sentiment, we need to consider the mixed signals from institutional flows. The significant buying by banks was a positive, but the selling from mutual funds and foreign corporates suggests some caution remains. The technical indicators also point to short-term selling pressure, even as long-term averages remain bullish. Investors should remain attentive to global oil price movements and any further developments on the fiscal front, particularly regarding debt reduction and sector-specific policies. The market's ability to sustain this positive momentum will depend on continued positive news and consistent institutional support. That wraps up our Stock Sense Morning Brief for today. Thank you for tuning in. Remember to subscribe to our YouTube channel and podcast for daily updates. Until next time, invest wisely and stay informed.